Thailand just became the first out-east ASEAN country to greenlight Bitcoin and their ETFs. While everyone's watching in Europe, the $70 billion market just opened the floodgates to institutional crypto money. Indeed, there's one detail buried in these draft rules that could change everything for how SIA trades digital assets. Stick around, because what happens in Thailand in the next 90 days might force every other country in the region to follow. Here's what just went down. Thailand's Securities and Exchange Commission dropped draft regulations that would let investment firms create exchange-traded funds for Bitcoin and their own. This isn't some vague proposal. These are actual framework rules with a public comment period ending in March. We're talking about a country with over 70 million people and one of SIA's most developed financial markets suddenly giving the green light to crypto ETFs. Now here's why this matters more than you think. Thailand isn't just copying what America did with spot Bitcoin ETFs. They're building something potentially bigger. The draft rules allow both spot ETFs that hold actual Bitcoin and their own, and synthetic ETFs that track crypto prices through derivatives. That second option, that's the detail almost everyone missed. I'll explain why it's huge in just a moment. First, let's talk timing. Thailand's move comes right as the sea is softening its stance under new leadership. AUL Tkins, the incoming sea chair, has a completely different view on crypto than Gary Gensler. Wall Street banks are already preparing for the regulatory clarity they've been waiting years for. Now Thailand sees the same opportunity, and they're moving fast. Here's the kicker about those synthetic ETFs. Traditional banks in Thailand that might be nervous about holding actual cryptocurrency, they can now offer crypto exposure to their clients without touching the underlying assets. It's a bridge product. ND bridges matter when you're trying to move institutional money into a new asset class. Think about what this opens up. Retirement funds, pension managers, insurance companies. These are institutions that legally couldn't touch crypto before. Now, they have a regulated vehicle. Indeed, Thailand isn't doing this in isolation. Singapore, Hong Kong, and Dubai have all been building crypto-friendly frameworks. This is a race for capital. Now here's where I020022 fits into this story. Thailand's financial system already uses WIFT and is transitioning to I020022 compliant messaging standards. That means when these TFs launch, they'll plug directly into the same infrastructure that banks use for cross-border payments. XR, XLM, LGO, all the I020022 tokens, they're designed to work seamlessly with this exact system. Thailand isn't just opening the door to Bitcoin and their own. They're building the rails for the entire next generation of financial assets. Indeed, here's what most people don't realize. When one country in a region makes a bold move like this, it creates pressure on neighbors. If Thailand captures billions in crypto investment, Malaysia and Vietnam won't just sit back and watch. We could see a domino effect across out-east SIA in the next 12 to 18 months. But what should you actually watch now? 3 specific things. 1. The comment period ends in March. Watch for any major pushback from traditional finance players or changes to the draft rules. 2. Track which Thai investment firms file first. The early movers will likely get the biggest inflows. 3. Watch Bitcoin and their own prices around the potential launch date. When spot TFs launched, we saw billions flow in within weeks. Thailand could trigger a similar move. If you're looking to position yourself before these TFs launch and want to start trading Bitcoin or their own, you can use BitUnix through the link in the description. Here's your bottom line. Thailand just made a move that could reshape crypto adoption across out-east SIA. We're watching regulatory dominoes start to fall in real time. The next 90 days will tell us if this becomes a regional trend or stays isolated. This is educational content only, not financial advice. Ways to your own research before investing. The crypto market is volatile and regulations can change quickly. Follow Stack Daily 60 for daily crypto and money tips.